Hi, I'm James McGuire, and on today's eSpeaks, we're looking at the results of a survey. The survey is called The State of Cloud Software Spending. We'll talk about the main takeaways, and we'll find out what's driving the cloud software market these days and where it's headed in the future. To discuss that, I'm joined by Scott Goering, Business Development Partner at Battery Ventures. Scott, very good to have you with us today.
Thanks, James.
So I think it's really interesting. We've got some bullet points from the survey I want to talk us through and get your insight on, and also get kind of an overall view. But I'd like to just make a comment about the sector, if I could, is that, I think about cloud software spending. There's a lot of talk about recession on the horizon and maybe even layoffs. But I think that sector of cloud software spending tends to be pretty resilient in good times and not so good times. Agree, disagree, and furthermore, what do you see as like an overall takeaway from the report itself?
Yeah, well, in fact, this was the question a lot of executives, founders, whether they're battery backed or others, were starting to ask. There's a lot of uncertainty out there. What do you guys say? So we took the chance to survey 100 C-level executives. Huh? And that control around $29 billion of IT spend. And we asked them,
and if I may, sorry, are the executives across various sectors, like finance, healthcare, or is it just like not startups, but like established enterprise IT companies or companies have, yeah.
Yeah, so 85% of the folks surveyed had 1,000 or more employees. So some of them may still dip into that private startup category. But also we surveyed people that had over $1 billion in IT spend. Okay. So anywhere from manufacturing, retail, banking, insurance. Really, we tried to get a broad cross sample of the environment.
Right. So your thoughts on whether or not it's cloud software spending is resilient in the face of almost anything, or not necessarily?
Anything's a tricky word, but we feel like cloud spending is relatively inelastic in that people are investing in the future and investing to take their companies in new places. Mm-hmm. So maybe a quick example. I was out traveling last week in the Southeast and the Midwest. Mm-hmm. I met with the CTO of a major airline. And he continues to invest in the data and analytics stack, not because it's a neat toy or it's the latest shiny object, but because they're starting to think about how these tools and systems can impact the operations of their business. When your plane pulls up, how do you decide what gate to go to? Well, it's actually looking at the operations and the cost underneath of it. Mm-hmm. And so software has this deflationary effect on the greater business operations. And so he can continue to invest in that ML AI data stack.
Interesting, and I want to get your overall takeaway, but the idea of software as a deflationary theme, I mean, it's a theme you hear a lot when you talk about the financial news, and we're dealing with the possibility, the reality of inflation now, where people say, well, the large mega trend of the growth of technology and the way it's reshaping our world is actually deflationary. I know we're a little far afield from the survey. Do you buy that idea?
Yeah, fundamentally, I think people are doing some really interesting work out there, and we've seen it across different sectors as we talk to enterprise executives. Mm-hmm. That, they're investing in this, but the reason they're investing is because there's fundamentals that support it. And it's that it is driving down the cost of the operations, whether that's people or supply chain or, just-in-time manufacturing. What are the different places that you can optimize in your business? That's where people are applying the tech now.
Right. All right. So I've got four takeaways, four key bullet points. But do you have an overall takeaway? When you looked at the report, you said, "Wow, this really important thing is true," for kind of a global sense of it.
Yeah. If I put myself in the founder's chair and was thinking about my business over the next 3 to 5 years. Right. I think it's that you continue to invest in product. Technology has strong tailwinds, and as the market recovers, great products will continue to win.
Mm-hmm, definitely. All right, so this is from the report, bullet point number 1. While CXOs are historically more conservative with their approach to tech spending and budget allocation, in times of economic uncertainty. We've talked about this a little bit, but budgets are actually less elastic than one might think. The majority of survey respondents expect to increase their total technology budget despite more conservative spending strategies. All right, so we did mention that. Is there an additional in-depth thought on that? Something, what would you add to that?
Yeah, I mean, we're seeing it in the numbers. 54% of the respondents said that they're going to increase the budget.
Mm-hmm.
43% are still increasing tech hiring, particularly around DevOps engineers, data engineers, security engineers. And those are the people that fundamentally buy these enterprise IT tools and set up the pipelines to make everyone productive in the rest of the organization.
Mm-hmm. Bullet point number 2, data and security remain top spending priorities for enterprise technology buyers, though SaaS vendors that improve workflows and increase automation are gaining adoption. Within security, cloud security is a top priority for most respondents, closely followed by adjacent needs in data, email, and network security. Somehow I'm not surprised about the network security piece. It seems like the security of networks is always, that never goes out of style as a primary concern. But at any rate, what do you take from this bullet point?
Yeah, I think there's a couple things about where people are putting their money in the priorities. Data and analytics, 31% said that's our top priority. Security, 31% that's our top priority. What we're seeing though is in the security space in particular is the transition continuing in the entire cloud journey. So now you're starting to see companies in the banking, in the insurance, in healthcare that traditionally haven't been cloud centric, moving that direction. So today, that means they're buying network security for their on-prem still. It also means they need to buy cloud data security as they transition stuff over. I think the tailwinds are obviously in the direction moving towards cloud. And as that happens, really this is becoming a board level conversation. And so it's that balance of risk versus sort of the budget that CISOs are asking for. Mm-hmm. And things continue to be positive for this sector.
One interesting factoid from that, the 31% spending on data analytics. I mean, I'm not surprised by that, of course, because a dollar spent on that is usually what is going to pay dividends, no doubt about it. But I'm almost curious in that, data and the need for data analytics is anything but new. And you think like, the market would be like really mature and saturated by now, perhaps. Like by 2012, everyone would have rushed so deeply, or even 2018, everyone would have rushed so deeply into data analytics that budget is beginning to trickle lower at this point. But no, I don't know. Your take is it seems like data analytics continues to be growing even now.
I think there's two ways to look at it. One is people are productizing the data, so that has some strong tailwinds as digital builders are going out there and creating net new things. Mm-hmm. The other, drawing back on a conversation I had in New York a few months ago with a large pharmaceutical. Going into the COVID crisis, everything was BI, everything was backwards looking, everything was reporting the data. The data and analytics stack is now forward looking. And not only is the technology getting there, but the company leadership, the boards of these major corporations are starting to understand the impact of this. And so I believe that this forward looking data, the modeling has room to run.
When you say forward-looking, you mean it's predictive analytics, or do you mean people using data analytics packages to do their best to forecast the future without specifically using predictive analytics tools?
Yeah, I think it's a combo.
Okay, interesting. All right, bullet point number 3, product-led growth, PLG, has gotten trickier as a way to enter the enterprise, but quote, bottoms-up technology adoption is still happening. The majority of companies surveyed allow engineers to self-select and procure technology and install it in a sandbox environment. For vendors, this means there is an expectation to demonstrate product value to the larger enterprise. All right, so what's up with that?
Yeah, it's interesting. There's a bit of a cliff between being able to deploy in a sandbox. An individual contributor can take a piece of code, put it in a product, put it in. Most people are supportive of that in the enterprise. However, getting that into production only 14% allow sort of this individual selection. And I think there's a lot of reasons behind that in terms of compliance, security, and so forth. But for the startups out there, there are two sort of key takeaways. One is the sales motion may look different. So you may have landed a great account, but now you need to go actually get it in production. And that's where the sustainable, durable revenue is. And so going back, Procter & Gamble recently talked about their AI factory and the work that they're doing there. And the CIO stated, the last 5 years have been about experimentation. There's probably a lot of startups that have bits and pieces of somewhere of that experimentation, but going forward, his direction was, we're going to make standardization across this. We're going to start selecting a tool, not have 5 tools do the same thing. And so, that's where you start to see this from 3/4 being able to self-select down to the 14% in production. So founders really need to think about this as they look at their NASCAR logo sheet.
Interesting. All right. The other interesting piece about that is the idea of the engineers allowed to select and procure it and then put it in a sandbox. And that, people talk about the democratization of technology, and it's, of course, that means all workers at many different levels of tech savvy can access the tools, but maybe there's also something called the democratization of IT spending. If the engineers are the one doing the purchasing, you think normally it's the folks in the C-suite are doing the purchasing, but in this case, it's the engineers. You mentioned, of course, that it's confined to a sandbox, but I don't know. What does it mean that the workers at many different levels of the org chart are buying software?
Yeah, it makes it so that you can have this product-led growth motion. It's very efficient for a startup to grow that way into the enterprise. It also, sort of this concept of open source allows you to develop things with a different sort of order of magnitude of R&D cost. My main point, though, is that you need to think about getting from sandbox into production. That's where the real revenue is. That's where you spread across teams, and that's where you can build a business, into the later stage and pre-IPO rounds.
All right. So last bullet point from the survey, quote, a meaningful proportion of companies procure software from early stage companies with higher adoption rates in the technology, retail and e-commerce and industrial industries. Regulated industries like financial services and healthcare remain more conservative in their purchasing patterns. Not a huge surprise there, but what do you take from that?
Yeah, this isn't a huge surprise to us. We hang out with a lot of people that tend to be forward-thinking in enterprises. But it's not uncommon in a regulated industry to say, yeah, but who else bought this technology in my peer set? And it makes sense because they're worried about, if you're a healthcare organization, you're worried about the patient data, or you're worried about the results with the patient. If you're a bank, you're trying to make sure that you look very steady and that people can access their 401k. If you're a retailer, of course, you want to deliver a great experience. You want to have the best experience for your customer. But at the end of the day, if you don't get your hammer from Lowe's or your shovel or your shampoo from Target, it's not the same criticality. So there's a little bit more experimentation that can happen on that e-commerce, that front end side of things versus regulated. I will say, though, we're starting to see the cracks, even at the cores. Banking cores are starting to move slowly, but intentionally onto new providers that are cloud-based. We're starting to see healthcare pop up in some interesting cloud deployments as well. So we're at a really interesting transition, but e-commerce and the mid-stage to late-stage startups are still great places to cut your teeth with early-stage tech.
I've definitely heard that about the financial services and healthcare companies, that they're not as stodgy as they used to be, and they're going a little bit further out on the limb. They know there's a lot of advantage there, so they're willing to invest in it. Sort of a sense of summing it up, the future of cloud software spending. What is a trend or two that you see developing in the years ahead?
Yeah, it's a great question.
Maybe that's the big question ultimately.
Yeah, that is the big question. Budgets, remain resilient near term, but we asked the executives in the survey, where are you a year out? Where are you 5 years out?
Hmm.
And probably not too surprising, but if we toss 2027 out there,
Hmm.
94% expect their security budgets to increase dramatically. 84% say that for data and analytics. So I think the net takeaway is, if you're a founder today, particularly early stage, continue to invest in that product.
Hmm.
Continue to talk to your customers, figure out why it is they're buying from you. And the market, no matter what the turbulence is near term, long term, is bullish.
It certainly seems so. I like to get your take. This is not exactly the survey. I wonder if you have any thoughts on this. The relationship between cloud and artificial intelligence. It seems like it's, cloud supports and drives AI. There are independent AI vendors, and then of course there's the hyperscalers, sell AI. This is too big a question. If it's too big a question to answer, just tell me. I'd say, what do you see with this dance of cloud and AI? Any thoughts on that big amorphous question?
Yeah, I mean, fundamentally, cloud provides some really interesting aspects around being able to access your data, the underlying architecture. Um, but we are also big believers that there are going to be large independent companies out there, and I think you can see that just with Snowflake and Databricks, being relatively cloud agnostic, being
Mhm.
able to run those across multiple clouds. And so people will continue to pick the best architecture, the best uh, cost benefit for their enterprise. And we see that coming from a lot of independent software providers.
It's yeah, Scott, I think you said it. It's a lot of interesting stuff. It's going to be an interesting sector to follow in the years ahead. Thanks so much for sharing your expertise today.
Absolutely. Thank you for having us.